We are live in Omaha with Warren Buffett, the chairman and CEO of Berkshire Hathaway this morning. And right now we are sitting on a Global 6000. Warren, this is part of the signature series for NetJets. You just started taking delivery of these planes, I believe, in December of last year.
Correct.
But this is a series of planes that you specifically designed with Bombardier because you wanted certain things that you wanted in these planes.
Yeah, the people at NetJets did, but I actually made a suggestion or two myself.
What was your suggestion?
I like a wide bed.
So that's in back there?
That's back there.
All the way back. These planes can hold up to 13 people. They also have special crew quarters where you can actually sleep with them. And I guess that's so you can take longer flights.
That's right. That's right. We need a crew change en route.
Okay, so you've got these planes that are out here, and we're going to be sitting down with Jordan Hansell in just a moment to talk more about that. But one interesting thing is that this weekend happens to be a huge weekend for NetJets because so many people are coming not only here to the Berkshire Hathaway annual meeting, but also to the Derby. When I saw Bill Gates earlier this weekend, he said he thought, just based looking at the runway, he thought there were about 25% more jets than there were last year at this time, private jets. I talked to Lou Simpson over the weekend, and he suggested that he thinks it's part of the wealth effect. People really starting to buy into what they're seeing in the stock market. What do you think?
Well, we are seeing in flying that people that own the planes, or fractions of the planes, are flying more hours than they were. It was interesting to me when 2008 came along in the fall. People already owned the planes. They were paying a monthly management fee. They had their homes, vacation homes, wherever they might be, in Florida or in Colorado. But the flying fell off dramatically. I mean, very, very, very rich people cut back in a significant way. It was like somebody blew a whistle, and it's been coming back from that.
Was that in part, you think, just because of the appearance of austerity, or do you think that was really that they just feel like this is a luxury that they can let go before everything else?
I think they just felt poor, even though they were still very rich. No, I don't think it was that they were embarrassed getting out of a plane, but I think that they and their families, in some way, even though they had the homes, they had the plane, they were paying, but they just changed their behavior very, very significantly. We saw it a lot of places, but it surprised me the extent to which we saw it with the planes. Now, like I say, they've come back dramatically since then.
Okay. Again, what do you think about this particular plane? Have you spent time on the Global 6000?
I've flown it once, and once is a very powerful sales tool. Jordan will be working on me here in the next few months, I'm sure, and I think he probably has a patsy.
I know that you're not somebody who looks at the market averages on a daily basis or cares about any of these things, but when you start seeing the trend that we've been seeing, which is almost a straight march up, it seems like we're hitting new highs almost every day. And that's the type of thing that catches Main Street's attention. You've got a lot of individual investors who are sitting around wondering if they've missed everything, if they should get back in, if it's too late, if they've missed the train. I mean, what would you tell those people who are sitting at home wondering what the Oracle of Omaha thinks about when it comes to the markets?
They should pay more attention when they're crossing those milestones on the downside. That's when stocks are getting cheaper. That's when stocks are going on sale. But people do get more excited when they see new highs. Well, I can remember when it was a big time when the Dow crossed 100. And I certainly remember well when it hit 1,000. I mean, that was a magic number. So probably in my lifetime, and certainly in your lifetime, you will see markets that are far higher than this. I mean, the retention of earnings by American industry, the growth of the country, but will cause stocks to go higher over time. You're not getting everything out of stocks in terms of the dividends they pay compared to the earnings, so that retention builds it up. It's exactly like if you had a savings account and you only took out part of your interest, your savings account would grow. So I don't get too concerned about a given level. You will see numbers a lot higher than this in your lifetime, Becky.
Joining us right now, joining the conversation, is NetJets Chairman and CEO Jordan Hansell. Jordan, thank you very much for hosting us here today. We appreciate it.
Thank you for letting me do it. It's been fun.
We were just talking inside the Global 6000, I might add, about just the idea of how many people are coming back, what the numbers are like. When I talked to Bill Gates this weekend, he said just by looking around casually at the number of private jets on the runway when he came in, he expected that it was something like 25% more in terms of people who were coming to the annual meeting on private jets. Was he right?
I think he's in the ballpark. We had a record number of flights for us coming in and out of Omaha this year for the meeting.
What do you attribute that to?
I think it's fact of the economy coming back, and people are starting to feel better about things. They're more optimistic, and they want to be here to hear what Warren and Charlie have to say, and they want to do it efficiently.
Is this the biggest weekend for you, just in terms of, I mean, I've heard that in the past, and I kind of make that number up and throw it around, but in terms of both the Berkshire Hathaway meeting and the Kentucky Derby, when you add them up?
It's a big weekend. Our biggest weekend and day is the Sunday after Thanksgiving. But this one ranks up there as well.
This one ranks right up there, too. So Kentucky Derby, did you have a similar gain
we did.
there?
We had a great set of trips down to the Kentucky Derby, too.
Okay, so Warren, you see what's going on. You see what's happened. Is it a situation where people who hadn't been buying before are buying in? Is this people who are just now feeling like they can do something like this? Or is this a resurgence of all the old customers who were there who have come back and maybe are using it more frequently?
It's both from our perspective. We've got people who've been in the program flying more, and we're up year over year 55% in terms of new owners. People have just come to the program for the first time.
50% in terms of that?
Mm-hmm.
Can you give us numbers on that?
Well, I like to keep that secret unless Warren tells me I'm supposed to be telling people. So I give generality.
Don't let it work on me.
So 50% in terms of new customers. That's interesting.
Yeah. We keep looking for Joe's name, too. But
yeah. Joe, have you jumped in with that yet?
We haven't shown the jet from the other side, and Andrew says that's where my name is. But I'm getting, the more you talk about it,
there's a whole red ribbon. They're going to pan around at the end of the show.
The more you talk about it without doing it, I think that I'm getting my hopes up, and it's not real. Hey, Warren, I was thinking about the business of NetJets, and you remember the bumpy period you had, but can you explain? It was based on the dropping value of the jets themselves, I think, and that how does that work? It's all accounting, but there were a couple of really tough years. Why are you in a business that you can't necessarily insulate against the next big break? Or have you done something differently this time to make sure that doesn't happen again?
No, we're not insulated against major downturns in the economy, but that's part of the business. Incidentally, the Burlington Northern peak was 219,000 carloads, and it got down to 152,000 carloads. So all of our businesses, maybe with the exception of insurance, but all of our businesses showed declines of one sort or another, and some quite significantly during the recession. And you would expect aircraft to be in that group. But that doesn't mean it isn't a good business over time. See's Candy doesn't make any money in 8 months of the year, but Christmas always comes around, and the metaphorical equivalent of Christmas comes around in the jet business.
Warren, Bill Miller had made the argument, or at least in the question, and Becky asked it during the meeting, about airlines and given all the consolidation, whether you'd be interested in those. Do you think about NetJets in that context at all, in terms of a competitor trying to come in? We had talked to, one of the reasons I think you said during the meeting that you wouldn't want to buy an airline is that there's always a new competitor. Is there a moat in your mind around NetJets?
Yeah, I think there have been dozens of companies that have gone in the fractional ownership arena, and I believe, and Jordan can confirm that, I think we have over 60% of the market in the United States. So people do come in one way or another, but they really can't match, the breadth of our operation, the service, the safety precautions that we follow. So it's not it's not like the airline business. There will be nobody come in my view, that goes in the fractional ownership business and has any kind of success. In fact, people have been going out of it for some time, and like I say, our market share is held steady at around. It's in the low 60s, I believe.
That's right. Yeah, we've had steady market share for some time, and unlike the airline industry, we've been differentiating quite a bit. And you see the two aircraft behind us; those are signature series aircraft. They're completely different than anything you can get anywhere else. It's not like flying for Delta or for United, and you're getting on a 737. It doesn't matter where you are.
Mm-hmm. You started taking deliveries.
Sorry, Beck.
Go ahead, John.
No, you go, and then I'll ask. I have a totally separate question.
Okay, let me ask real quickly. Let's talk about the Signature Series behind us, Jordan. You started taking delivery of these in December of last year. How many do you have now?
Right now, we've got 8 on the fleet, 2 of which are leased to provide us with core, but 6 that we're flying fractionally.
And how about how many more deliveries you'll be taking?
We'll be taking about another 8 this year, and of course, we have up to 120 that we can take over time.
And this is part of that initial deal that you got to go in and help design some of these, too.
That's exactly right. Both of these aircraft, the Phenom and the Global 6000, were completed with the heavy input from the folks at NetJets.
Yeah, we should point out that they have the big one behind them. That's the Global 6000. Behind me is the Phenom, and I think that one holds 7 passengers.
It holds 7.
This one holds 13.
That's correct.
And the distances between the two for?
2,200 miles, 2,300 miles, depending on your flight pattern, nautical miles in the Phenom, and 6,000 nautical miles for the Global.
Is there a big demand for this? Do people get to request this as part of their package, or is it just luck of the draw?
No, they get to request it. If they're an owner, they obviously are going to get it faster. Before I've been trying to talk Warren into it here for a little while, but and we'll see if he ever decides to take that plunge, he'll get it even more. But
he's checking my credit.
That's right. That's right.
Hey, Joe, what was your question?
Mine was about kind of the air taxi business, and I wonder whether that's viable and whether maybe NetJets wouldn't even play there in the low end. I don't know how you do it. You buy a Honda Jet that doesn't even have a bathroom, but there are people that want to operate between cities that are 80, 100, 200 miles away, and there's capacity, but there's a way of booking these flights. I guess NetJets doesn't play there, does it, Jordan? Is it a viable business? Will that be a business someday?
NetJets has not played in that arena, and a lot of people have tried. It's a very difficult place to operate, and so we've not looked at it in some time.
Yeah, and I don't know if it's even possible to eventually do that. But is that what's your smallest jet? Was that the one that we just saw that holds 7? Or do you have citations?
That's right.
Oh, that's the smallest one.
Well,
okay.
The Phenom will be the new small cabin aircraft for us, so it will replace everything we had in that category before. And it will be the smallest jet we offer in the fleet.
Okay.
Jordan, when you look around, the biggest difficulty you face right now is what?
Oh, I think waiting for the economy to gain full stream. We're seeing it pick up in the United States, and Europe remains anemic. And as it continues to pick up, we'll do better. We've been working very hard. The team's done a terrific job getting ourselves in a strong position to compete forcefully when the time comes. And I think we're starting to see that in the United States already.
You are hitting record numbers. I mean, we talked before about how these are record numbers for some of these things. I mean, does that mean you're 100% back from any of the downturn?
No, we're still working our way back. And I think we will be for a while, but we're starting to see those early turns. And as you suggested, some of our performance is at record levels. So we couldn't be happier.
Well, one of the things we talked about is with housing, we talk about how maybe it's up 10% with Case-Shiller, but it's still 30% below the peak. Where are you versus the peak?
We're still roughly 20% down versus the peak, and the industry is over that, beyond that, 30% down or so. So we're in better shape on a comparative basis, but we have to remain vigilant.
Okay.
The contracts are generally for 5 years, and so we had a huge amount sold in 2007. And they matured in 2012, and there was quite a few in 2008 before the crash hit. So you had people that made a lot of money, financial types particularly, and they might not be in the same frame of mind now that they were in 2007.
Got it. Jordan, thank you very much for joining us this morning. We really appreciate your time.
Thank you for having me.
There's an article in today's Wall Street Journal that talks about Bill Gross and other people who have been very bearish on bonds, and says to this point it hasn't been an accurate reflection. But your take on what Bill Gross has been pointing out on this is what?
Well, I don't know what the exact specific comments. In terms of bonds, someday they will sell the yield a whole lot more than they're yielding now. I don't know when it'll happen.
So you agree with him on that point?
Oh, it's going to happen, and the question is well, the question is always when. I'm no good on that. And the question is to what degree it happens. But you could have interest rates very significantly different than what they are now in some reasonable period in the future. It's not a game that I can play. I mean, I don't have any special insight into that sort of thing other than that it will happen. In terms of stocks, stocks are reasonably priced. They were very cheap a few years ago. They're reasonably priced now. But stocks grow in value over time because they retain earnings and they expand basically the companies underneath. So, I like owning stocks. I do not like owning bonds now. There could be conditions under which we would own bonds, but there are conditions far different than what exists now.
Well, it's always been standard investment advice that you have some sort of a blend of stocks and bonds so that you keep things, just for the man on the street, I should say, for the average investor who is kind of looking at this, getting a little bit of advice. Joe went in not long ago and talked to a retirement specialist who told him he should be 40% in bonds. I just wonder if this is a very different time.
No, you shouldn't be 40% in bonds. My family, anybody that I've advised, and a lot of them are just typical people. I mean, they're not super wealthy or anything of the sort. And bear in mind they have the proper attitude, and that if stocks go down 20% in the next month, they're not going to be bothered. But I would have them having enough cash on hand so they feel comfortable, and then the rest in equities. Or if they, if they're farmers or, they could own apartment houses or other things. But I would have productive assets. I would favor those enormously over fixed dollar investments now, and I think it's silly to have some ratio like 30 or 40 or 50% in bonds. They're terrible investments now.
So now, this is not just your lifelong look on it. This is particularly to what's happening right now.
I bought bonds back in the early 80s. We made a lot of money, and we bought zero coupon bonds. And I bought them personally, and the price of everything determines its attractiveness. And when the price of stocks was way down a few years ago, the news was terrible, but stocks were cheap. News is better now. Stocks are higher. They're not ridiculously high at all. And bonds are priced artificially. You've got some guy buying $85 billion a month, and that will change at some point. And when it changes, people could lose a lot of money if they're in long-term bonds.
Lee Cooperman's point when he talked to us about it was that this is kind of like bending down to pick up a quarter in front of a steamroller.
Yeah, well, I'm not sure it's even a quarter.
Yeah, so it is a concern for you.
We are speaking to Warren Buffett, Chairman and CEO of Berkshire Hathaway, fresh off this weekend's big shareholder meeting. Can I ask him a question, Becky, or you want to?
Yeah. That's what we thought. No, jump in, Joe.
I got a shopping list here of some companies because I don't understand you sometimes. I'm bored with ketchup. Okay, I'm bored with some of they're great businesses. The things you buy, I understand that, but I'm just trying to get you to expand your universe here a little, and I still don't understand. And I'm not talking newspapers, even though it's media, but big media. And I got a list of companies here that I want to tell you why you've never really gotten that interested about. Okay, do you like Disney? Do you like that model? You got theme parks, you got movies, you got cable. You got Comcast, the parent here. You got News Corp, Viacom, CBS, Time Warner, even Google or Facebook or something. This is the future, Warren. I know sometimes you don't think you understand technology, but what makes you hesitant to do something that's so ubiquitous, and that as we get more advanced as a culture, media gets gets bigger and bigger as a percentage of what we spend our leisure time doing. Why can't you make an investment?
No question, and it's going to get bigger. I just don't know if I look out 10 years. I don't know which of those companies you name will be doing the best. It's an industry that's subject to a lot of change, and it's much easier for me to predict that ketchup will be doing well or Coca-Cola will be doing well in 10 years. And some of the companies you name will undoubtedly outperform the ones we own. It's just I don't know which ones.
Well, if you don't know, how is anybody else supposed to know then if you don't know? Do you think that you are like an old dog with new tricks or something? Does someone know how this is going to work itself out? Is there anyone on the planet that knows how it's going to really?
Sure, there are people, all kinds of people, a lot smarter about some of those companies than I am, and that doesn't bother me. As long as I can make money with ketchup and Coca-Cola, and I don't really think I know which one of that list that you ran off. There'll be a couple big winners in that list, and there'll be a couple that'll really surprise you on the downside. And you know enough about the history of the stock market to look at the tech companies that have fallen by the wayside, for example.
Hey.
But you will have a bigger winner in that group.
Who does know? I mean, if somebody knows it, do you know if there's anybody that you would listen to when it comes to those stocks?
No, there's nobody I'd listen to, but there are people in our office, for example, that would buy some of those companies.
DirecTV is one that both Todd and Ted have put some money in.
They put money in DirecTV. I think they put, one of them at least, has put money in Viacom. Liberty Media, maybe both have. I'm not sure.
Warren, do you feel any better? Do you feel any different about IBM since you bought IBM? They've had a couple of tough quarters.
Yeah, I think we'll be right about IBM, but I've said at the meeting, in terms of the certainty of conviction, I feel more certainty of conviction in terms of where Coca-Cola will be in 10 years, or Heinz for that matter, than I do about IBM, but I feel enough conviction about IBM to put a lot of money in it, and I like very much their financial policies, I like their position in the world, but I don't think it's as bulletproof as something like Coca-Cola.
And content.
You said the other day that you have bought more IBM shares, though, right?
Pardon me?
You said the other day when we asked you, you have bought some more IBM shares this year before the earnings were reported.
Yeah, I think we bought a few, yeah.
Joe, I'm sorry, go ahead.
Just getting back to just media, because I'm trying to understand. I don't know what the landscape looks like, and Warren probably doesn't necessarily. Does it look like the pipes, Warren, eventually become more commoditized? And we've, people have been saying content is king for forever. And then it's hard content is so, it's a creative area, and it's so hard, it's so specific to the people running it or the people that you bring in that are creative. I guess that makes it difficult too. If you're going to invest just in content, that's hard. Yeah. And then you don't even know whether to keep the distribution because of technology Andrew always brings up the disintermediation of all these different technologies. So it really is difficult to do, but there's just such a potential, it seems like to me.
Yeah, well, distribution was incredibly valuable, for example, when there were 3 electronic highways, the 3 big networks. And you could run a test pattern on one of them and get a reasonable audience practically. So when it was limited, when distribution was limited, that distribution was really valuable. And there were a couple of big VHS stations in the big markets, and the profit margins were fantastic. But as distribution became more ubiquitous in all kinds of forms, then, as you say, content is where the money is, and content will always be where the money is. That's why sports players, now make millions of dollars a year. When you can remember when, DiMaggio was playing for $25,000 a year or something of the sort. But content distribution magnifies the value of content, and you want to be. Unfortunately, I don't have any talent, so I can't cash in on that. And talent usually gets its share of the revenues. If you own distribution, and there's very little in the way of competition for your distribution, you can make a lot of money, and that was shown by what the networks and the TV stations did in the past.
This was a big weekend at Berkshire, and there were a number of events that took place. And Joe, Andrew was out here. He was here for all of this. The new issue this year was the 5K race that Brooks Running Shoes put on Sunday. Warren, you showed up for it.
Oh,
Andrew,
I participated in a big way. I shot off the gun.
Yeah, you shot off the gun, but you showed up. Andrew told us that he was going to show up, so we were there waiting to shoot him. There's Warren shooting off the gun. They were looking and looking and looking, and I was not there, I will admit, but I never claimed I would be. In fact, I said there was no way I was getting up that early on Sunday, which is the only day in the last 3 weeks I've slept in. That's Steve Burke. He did show up for the race, and Andrew didn't.
So that looks like a Steve Burke. Steve did very, very well.
Steve Burke is a board member.
He did it.
Yeah. Steve Burke is a board member.
He beat every board member. I think he might have even beat most Berkshire employees. I think he did it in under 20 minutes.
That was a fast
frankly,
pace.
He's the boss, so I didn't want to have to.
You were hungover, probably.
Even try
you
to.
You didn't even show. Badly.
I would have lost so badly. I didn't even. I couldn't bring myself.
Did you say you were going to be there and then you didn't?
I didn't say. I said I was contemplating.
He did say he was going to be there. He did say he was going to be there because they were looking for him with the cameras to shoot him.
I waited to shoot the gun. I kept, where's Andrew? Where's Andrew? But Steve Burke ran a 2:39 marathon one time. I mean, we had some real talent on the board.
Wow.
Yeah, 2:39. Yeah.
That's scary.
Yeah.
Yeah. Thank you, Becky, for raising that issue. I
You're
appreciate
welcome.
But a good excuse to talk about.
Tattletale sister over here.
Yeah. Thank you.
Yeah.
You had the
it gives you a good excuse to talk about what?
No, I said it was a good excuse to talk about the wonders of Steve Burke's running performance, which was outstanding, we should say.
I mean, do we know that, was it really under 20 minutes? I mean, I don't even know if I've ever run a 6 minute.
That's
it was
what I
under
heard.
20 minutes?
That's what I heard. Yeah, no, he's fast.
I want to say 18 something, but I don't know if I'm making that up.
18 minutes, something around 18 minutes. Yeah.
Oh, under 21. Under 21, I'm told. I'm told under 21. Anyway, it was a lot faster than Andrew or I did. So,
yes.
Way to go. Hey, very quickly, before we go to a break, Warren, I wanted to ask you about JCPenney. We've been watching this story very closely. There was a story recently about how I think Goldman Sachs had been potentially lining up a line of credit for them. It's got to be a company that you've been following, too, because Fruit of the Loom is a supplier to JCPenney.
They're a supplier, but I worked for JCPenney for a considerable period of time. I've got a rooting interest for them. I don't have a financial interest, but I would like to see JCPenney succeed.
You would like to see them succeed. Do you think they're going to?
I think it's very tough. I mean, they obviously alienated a significant part of their customer base in the last 18 months or whatever it's been. And retailing it's a tough game, and you've got very, very smart competitors who are out there doing smart things every day. So when you lose momentum, and when you turn off a significant part of your percentage of your customers, it is a big job to get back. I really hope that Ullman pulls it off. I mean, I'm for him, and I think that they've got a good man in there to do it. But I'll just have to wait and see the figures on it.
They've been burning through cash pretty quickly.
Sure.
Has it ever gotten to the point where, as a supplier, you've gotten nervous about it?
No, but you worry about that if you're a retailer getting to that point. When your suppliers get worried, you've got troubles. But that is not the case with Penny.
So you've never actually worried about it?
No.
Okay. This is the site of the Berkshire Hathaway annual shareholder meeting, and that's when the Berkshire chairman and CEO Warren Buffett spent all weekend on the stage in different venues talking to all types of people. There were about 40,000 shareholders who were here this weekend. But Warren, we get the chance now to sit down with you and talk about the perspective of where things are headed in the stock market right now. People look at you. You're called the Oracle of Omaha because they think that you are one of, if not the greatest investor of all time. We've been watching where the markets head. We've been watching the new numbers that they run through, the Dow above 15,000 and the S&P above 1,600. That's the type of thing that makes people sit up and take notice, even when they are not people who pay attention to the stock market every day. It's got people worried. It's got people eager. It's got people anticipating about what comes next. What do you say to those people who are just looking for any sort of advice on what they should be doing right now when it comes to the stock market?
Well, I never know what comes next. No one knows what comes next. But what you do know is that over a long period of time, American business is going to do fine. And you not only get dividends, but they retain earnings, and values will build over time. Berkshire's value will build over time. But you can go up and down the list, and they will. And you never know what they're going to do next week. You never know what they're going to do next month. Anybody that tries to buy and sell stocks actively, in my view, is making a terrible mistake. Anybody that owns a cross-section of American business at these prices, I think will do very well over a 10 or 20 year period. And I have no idea, how they'll do in the next 10 days. And I don't think they should think about it.
You said earlier this morning that you remember when the Dow went above 100?
Right.
When was that?
Well, it was in 1942. It hit a low of 92 on the Dow. And I bought some stock and I watched it go down. And then I watched it go up finally, and the Dow crossed 100. And it was before I got out of college that, or right when I got out of college, that it crossed 200. Mm-hmm. And then I've watched it cross 3, 4. It'll go far higher over time, just because businesses will become more valuable over time. I mean, it's going to happen. But if you think you can buy and sell stocks based on current news or something of the sort, I think you're giving away an enormous advantage which you have. I bought a farm in 1985. I haven't had a quote on it since, but I know what it's produced every year, and I know it's worth more money now. If I'd gotten a quote on it every day and somebody said, maybe you ought to sell because there's clouds in the west or something, mm-hmm. it's crazy.
Over the weekend, or on Friday, I should say, we spoke with Charlie Munger, who's the vice chairman of Berkshire, and he talked about how he thinks bankers are like heroin addicts because they get addicted to things like leverage and different things. And yet the biggest investment that Berkshire has in a stock is in Wells Fargo. So not all bankers are created equal, I guess we read into that?
That's true. And a lot of leverage has been taken out of the system. You hit right on it when you said because of leverage. Leverage is like heroin to people in investments. I mean, everybody starts thinking I could make a little more money if I leveraged up. And of course, that's the way they felt about housing. And,
mm-hmm.
and that's why we got in all this trouble. People wanted to borrow every dime they could against their house. So when they went down a little bit, they had negative equity. So leverage is is catnip to people in finance, and it's particularly troublesome in banking because you can issue a government guaranteed piece of paper. So there is no market system that puts a limit on the leverage that you can obtain. In fact, people give you all the money they have, and you can have leverage of 100 for one if the depositor is guaranteed by the FDIC. So they have the ability. They had the ability to leverage up, and they had special purpose vehicles, and through derivatives they could leverage more. And it's just tempting because it's the way to increase earnings. That's how Freddie and Fannie got in trouble. Freddie and Fannie had a perfectly decent mission, but then they just built huge portfolios, and they had the ability to leverage because the government was behind them. So anything the government is behind, particularly, you need someone that can put their foot on the amount of leverage that they have.
Last time we spoke with you, I think you said that you were still buying Wells Fargo in the market, that you were still adding to your. Are you continuing to do that?
We've bought Wells Fargo probably every month this year. Yeah. Mm-hmm.
Moody's, you're not buying. You've been selling that. At least that's what
we sold some last week. Yeah. Mm-hmm.
You sold some last week on Monday through Wednesday. There was a filing on that. The obvious question becomes: are you going to keep selling that? Are you going to drop down? I
guess the obvious answer is I don't tell. If we sell, we have to announce it as long as we have more than 10%. And then if we get to 10%, we don't have to announce it after that. We don't have to announce it very quickly
publicly
after we do it. Yeah, we have to announce it.
So there would be an advantage to owning less than 10% because then you're...
Yeah, but we've done, we're selling Moody's at 6 times what we paid for it.
Okay. Joe, I know you have a question too?
It was more of a comment. I was listening to Charlie and thinking about, Andrew has written a book on this. And Warren, Charlie was saying, then they're going to do it, and then they're going to leverage to the point where they blow up. And that would be fine. And in any business, if you mess it up and you blow up, then you quickly learn you don't do it next time. But it's either the government backing or being systemic so that you take down a country like Cyprus. That's what makes a difference. So we're back to too big. If you're too big and you're systemic and you take everyone down, then you can't fail. So you can do these things. But in a perfect world, is it better to regulate these guys or just make it so that they can fail? It seems like it would be self-correcting. Bankers would not be able to. They wouldn't be able to act like that. Bankers, if they were going to go out of business, somebody else who was more prudent would obviously take the place of those guys. But as long as they can't fail, then we need regulation.
And one of the problems is, Joe, that when they failed, the people at the top often went away rich. So it isn't like their calculus when they leveraged up was that if they would lose everything if it went bad and they needed society to bail them out. So it was the shareholders that lost 90% or more in certain of the banking institutions. But the management's, I don't know of a CEO of one of the really big institutions, whether it's Freddie or Fannie or AIG or a number of the banks, where the CEO went away in any kind of financial distress at all. They went away rich. So they have a different calculus, and in the case of the banks, they were able to offer government guaranteed deposits. And in the case of Freddie and Fannie, they had the implicit guarantee of the federal government, and that enabled them to leverage to the sky. And I think it's perfectly appropriate that they be regulated in terms of the amount of leverage they can have.
Warren, would you put Berkshire, and specifically, I guess, the insurance businesses, given the size, in the systemically important category that sometimes we put some of the big banks in?
No, we can't issue government guaranteed paper. And if you look at our resources, our earning power and everything, it's an incredible percentage, of anything bad that can happen to us.
Well, for you specifically, but AIG got us in a lot of trouble. Should the regulators be looking at the insurance companies as potentially the ones that could really get us in a mess next time around too?
Well, regulators are looking at insurance companies all the time. Right. We are regulated.
But the insurance industry is saying, no, you shouldn't look at us. Or who's right?
Well, no, the insurance companies are all regulated, but they're regulated by the states primarily.
By the states instead of by the federal regulators who look after the banks.
Yeah. AIG got in trouble basically because in terms of the derivative positions they had. And I think they're changing the rules on derivatives. If the rules in terms of collateral and so on had been what they're going to be, it would have been a somewhat different story. But it was a very recklessly managed institution.
I guess my question gets back to the idea, though, that how safe should Americans feel if an insurance company can get us into that position? Derivatives, if that's taken away, you think that can't repeat itself? Another insurance
I think that
agency?
I don't think an AIG will be the type of problem. I mean, Berkshire itself. I mean, we have 200 billion in net worth. We always have at least 20 billion of we have 200 derivative contracts. Lehman had hundreds of thousands. Bear Stearns had hundreds of thousands.
Right. So the big weapon is going to be something we haven't thought of probably next time around.
We will have another bubble, and it will burst. It won't be the same as the last one. That's been the history. You don't have one internet after another. You have housing after the internet.
Right. Andrew,
but capitalism will continue to have excesses. You can count on that.
Yeah.
Hey, Warren.
Andrew, I'm sorry, you had a quick question.
I just wanted to ask, a lot's been made of the fact that you had a short seller, Doug Cass, there asking questions, and I wanted to just get a post-mortem. How do you think it went, and what was the hardest question you think you got?
Well, I don't think we really got any particularly hard questions, but I think it.
We tried to throw some zingers.
Well, we'll give the best answer we can. I mean, that doesn't mean I don't have an answer. If you ask me what the stock market's going to do next week, I have no answer at all. But so there's plenty of questions I can't answer. But I thought the questions were good that we got generally, and I think that
you invited a guy who's short your stock to come out after you knew you were going to report a 51% jump in net income.
Yeah, well, that's the danger of being short.
I mean, bring him on. Hey, you knew you were going to get 50% increase in net income, and you got a guy who's short your stock. I mean, he should have known. He should have stayed home.
He wants to come back next year.
Oh, I'm sure he does. I'm sure he does. God, it was the greatest thing in the world. But you're not going to give him $100 million, I guess. Charlie said no.
No, I don't think we can give him $1 million. Maybe even $1.
We've been spending the morning with Berkshire Hathaway Chairman and CEO Warren Buffett. Now we are joined by another very special guest, Microsoft Chairman Bill Gates of the Bill and Melinda Gates Foundation. And Bill, thank you very much for being here this morning.
Great to get up.
Well, we are thrilled to have the two of you sitting here with us together. People are going to be watching this, realizing that you are two of the richest men in the world, and that's because you are two of the brightest businessmen. We've been watching the markets. We've been watching what's happening, and I know that this is not something that either of you spend a lot of time wondering about, but our viewers are going to have a question, just what you think about where we've seen the markets headed. And we've talked with Warren about this morning. Bill, your thoughts. And again, I realize you don't look at these numbers every day, but people want to know what you think about this.
Well, I know less than Warren does.
You're in trouble.
There's always the question of what's going to happen with interest rates. It has this fundamental effect on things. Certainly you could say equities are a good deal relative to bonds at this point. But, if interest rates are going to go shooting up, you'd like to, sort of stay short, stay liquid. And so it is definitely a overreaching figure that people have to think about as they're investing right now.
In terms of what it could mean, what we haven't talked about this morning with either one of you is the currency markets. There are a lot of people trying to figure that out because it seems what central banks are doing right now is chaotic, particularly when you look at what the Bank of Japan's doing with the yen and what that means around the globe. Have either of you spent much time thinking about that or going through any of those maneuvers? Any big thoughts from either of you on it?
We talk about currencies.
Yeah, there's been times in the past, in between like World War I and World War II, where there was an effort for people to depreciate currencies. I think this, in terms of simultaneously people trying to stimulate their economies by having very low interest rates and weakening their currencies, it's pretty unique. It's unfortunate for somebody who's trying to reboot their economy that they can't relatively get their currency much below. In the EU, they've given up that tool altogether. Mm-hmm. Everybody else, you're fighting almost everybody with weakening currencies.
It's easier to predict that interest rates will go up at some point, and probably substantially, than it is to predict which currency will gain versus another currency when that happens.
I guess the big question is when on all of these issues,
like
when these things will run. Today happens to be the 3-year anniversary of the flash crash. since that time, there have been a lot of things that have shaken investors' confidence. If you look at LIBOR and the rigging scandals that were there, if you just look through some of the issues at the CBOE, some of the things that they've been talking about at the CME too. On Friday, I sat down with Charlie Munger, and he talked a little bit about the high-frequency traders. Listen to what he said in terms of who he was comparing these traders to. We don't have the soundbite, but at the time, Charlie said, this is basically legalized front running. What do you guys think about that?
I agree. I mean, that's why these fellows exist and why they spend enormous sums on trying to get speed of transmission, that's a millionth of a second or a thousandth of a second faster than the other guy. I mean, it is not contributing anything to capitalism. And whoever gets the information, can front run just that slightest bit faster than somebody else. And they have algorithms that obviously they're working with. They make money, but that is not money. Berkshire Hathaway, General Motors, IBM does not make more money because somebody is front running by a nanosecond other orders.
It raises the question, though, whether average investors can get a fair shake on Wall Street. And that's probably always been a question that's been out there. I don't know that this time is a whole lot different than others. I mean, my dad has always looked at the market as kind of a Vegas in terms of being able to get in. Bill, you're looking at me skeptically.
Well, if you buy a stock and hold it for many years, the percentage effect of all these things we're talking about, assume you didn't sell during the flash crash, or I guess some of those got reversed. You still have a bet that's fundamentally based on that business. I don't think trading in and out of the market with high frequency makes sense for most people, and these frictional costs just add to the fact of how crazy it is. I mean, you might as well go to Las Vegas.
Okay, so that's the buy and hold is the solution to a lot of these problems, in other words.
Yeah, and that's really the primary function of the market is to have people provide capital to businesses, drive the valuation of those businesses, and that works just fine without this high frequency or even day type trading.
The flash crash didn't hurt any investor. I mean, you're sitting there with the stock, and the next day it's gone past. The frictional costs in investing for somebody that does it in a real investing manner are really peanuts. I mean, they're far less than the costs in real estate or farms or all kinds of things. So it's, unless you turn it to your disadvantage by trying to do a lot of trading or something of the sort, it's a very, very inexpensive market to operate in, and all that noise should not bother you at all. Just forget it.
Hey, Bill, we talked with Warren earlier this morning about how once a year he leaves the room for the Berkshire board meetings, and the directors sit around and talk about things that maybe they wouldn't feel as comfortable talking about in front of him. He doesn't know what they're talking about. You do. Can you give us any insights as to what type of things get brought up?
Well, I agree with Warren. This is one of the great improvements in boards is you get that person who's so wise, knows the company better, has a relation with everybody. Get him out of the room and say, gosh, part of the function of the board is to say, is our CEO doing the best job possible? Is our CEO the right person? Are there things we're seeing where we could support the CEO in a different way? Warren's case, we've talked about security or health, or make sure that we're performing our fiduciary duty. I think that's a great thing. It gets the board to think, boy, we are supposed to be, in certain cases, an independent voice, and we sit and talk about it, and then we welcome Warren back into the room.
I wonder what they said.
Bill, I know Joe Kernan has a question from back at studio, too.
I want to ask Bill some questions about his philanthropy, and based on something Warren said earlier. But first, Bill, I think we got to just ask you about all these tablets and PCs. Everybody's writing off the PC. You still do. Microsoft still does $80 billion a year doing. So I don't know what the hell it does, but obviously there's something going on in the PC world to still do that revenues like that. But what's the world going to look like, and how does the cloud factor into what Microsoft will do in the future?
Well, the cloud is a gigantic opportunity because now there's so many things that you can do in computing that just wouldn't have been possible before. So you've got a lot of the top companies going to seize that opportunity. In terms of the devices themselves, Windows 8 really is revolutionary in that it takes the benefits of a tablet and benefits of a PC, and it's able to support both of those. So, if you have Surface, Surface Pro, you've got that portability of the tablet, but the richness in terms of the keyboard, Microsoft Office of a PC. So as you say, PCs are a big market. It's going to be harder and harder to distinguish products, whether they're tablets or PCs. With Windows 8, Microsoft is trying to gain share in what has been dominated by the iPad-type device. But a lot of those users are frustrated. They can't type, they can't create documents, they don't have Office there. So we're providing them something with the benefits they've seen that have made that a big category, but without giving up what they expect in a PC.
Bill, what do you make of what's happened to both Apple's stock price and a view, frankly, that people have compared Apple to Microsoft over what may be the next decade, suggesting that they may grow more slowly?
Well, with tech companies, whoever's the leader is always questioned. They say, is this the end of them? And there's more times people think that's the case than it really is the case. Eventually they're right, and then they remember, okay, we said these people would have challenges. We've got some amazingly strong companies, Apple, Google, Microsoft, companies coming up like Amazon, Facebook, Samsung to some degree belongs in that mix. If you do deep software, both on the client and deep services, if you have things that are unique for businesses, which is a particular strength of Microsoft, the software business is an amazing business to be in, both in terms of growth and the profitability dynamics.
How big of a problem is China when it comes to that?
Well, China has been a disaster if you say per unit of your product that gets used, how much do you get paid? It's been over 10 to 1 versus the United States, and even like 4 to 1 versus India. And so it is a uniquely high piracy market. Now the trend line, that number's been coming down somewhat. The place we have piracy in China that we don't in most of the world is in government institutions, state-owned enterprises, and large businesses. All over the world, you have a challenge as you get down to the consumer, even to some degree small business. But here we have a challenge with these large entities. It is improving, but fairly slowly. So there's a constant dialogue with the companies, the government about how to get compliance rates up to be higher.
We are live in Omaha, Nebraska this morning. We are joined by Berkshire Hathaway Chairman and CEO Warren Buffett and Microsoft Chairman Bill Gates, who is on the board of directors for Berkshire Hathaway. And guys, one of the things that we haven't touched on today is what's happening with immigration. Bill, I know this is something you've talked about in the past where you do believe that immigration laws need to be altered. It looks like we are closer than ever to getting something done. How important is it in terms of what it will mean for technology workers, Bill?
Well, I think there's two issues here. One is the high-skilled worker part, where this group of 8 has come up with something that looks pretty good on that, and it's bipartisan. And then there's the overall issue where you have this great injustice of a kid who is undocumented, not being able to get scholarships, not being able to participate in a lot of things. So I think it would be fantastic to get this issue resolved. And as you say, it looks more hopeful now than in the past.
The one question people had is whether the situation in Boston would make it much more difficult to get through the House in particular. The Boston bombing.
It shouldn't. No. I mean, to take one case and then extrapolate it and say that should affect all of immigration policy does not make sense. And we ought to be attracting the kind of people we want to attract, and we certainly did not want to kick out of this country, millions of people that are here. And I think it's in both parties' interests now, which gets more important, to pass an immigration bill and So I think you'll see it. I mean, it's in their self-interest.
You mean because of the voting patterns
Yeah,
and what happened
the
in the last
Republicans are
election?
scared silly of losing more and more of the minority vote in the future, and the Democrats are for it based on principle. So
Another issue in Washington is the online sales tax being collected by online retailers. That again is something I think the Senate's expected to vote on today. Is it fair? Is it right? And should online retailers be protected in a way that they hadn't been before? Either one of you.
Well, the bill that asks them to collect these taxes makes a lot of sense. It's very unfair to the person who's got a physical store that not only do they have those expenses, but that the other person isn't collecting the sales tax. So it's a good thing for state budgets. It's a good thing for fairness in terms of the competitive framework.
Mm-hmm.
yeah, I think the fairness argument is compelling. You've got thousands of merchants here in Omaha, and have people walk into those stores, look at the item, and then order it from somebody out of state, and then not pay a sales tax and have it be a differential in their cost. I think it's just unfair.
Yeah. Joe, you have a question as well?
I mean, as long as Gates is here, there are big issues that I'm thinking about, and this is something that was in the news last week, and I'm going to ask it a certain way, Bill. Bioethics, is it keeping up with technology? And I'm talking about the Chinese scientists that put a bird flu together with a swine flu. Do you think about technology and things like this? And I mean, you talk about a brave new world that we're in. Are we safe? Can we trust all these different countries to abide by, prudent science when we've got this stuff at our disposal? I mean, a very contagious bird flu virus would not help anyone.
Well, certainly, the whole area of genetics will give us a lot of ethical challenges. And if you want to think about a nightmare scenario that's even worse than a nuclear bomb going off, bioterrorism is the area that you've got to be concerned, because the right sort of construct, either intentionally created or unintentionally created, could do so much damage. In the scientific community, there's been this debate about should scientists figure out which mutations would cause, say, a flu to get worse, and then they can see if that's starting to happen and be more alert. Or should they not try out those things because that information might get into the hands of somebody who would misuse the information? And that is a very tough discussion. Lots of reasonable scientists have disagreed about the right approach there. But it is an area, we're lucky that we haven't had a bad flu pandemic. And the fact we had a scare and it wasn't that bad made us get a little more prepared. But it would still be a huge problem.
Warren, you've spent a lot of money trying to prevent nuclear bombs from getting into the wrong hands.
Yeah, nuclear, chemical, and biological. I mean, there are people in the world that wish ill on their neighbors and would like to kill as many people as possible. And the choke point is not so much knowledge anymore, with knowledge spreading so much, but materials. And I think we've been very fortunate and probably quite vigilant, since 1945 when we unleashed the atom, and avoiding it. But the biological, as Bill says, is probably more of a danger than the nuclear.
Right now, we have more from Berkshire Hathaway Chairman and CEO Warren Buffett and Microsoft Chairman Bill Gates, who is a board member at Berkshire Hathaway. Gentlemen, I was thinking about how much Berkshire has changed. And Warren, you've written about this in the annual letter. But when you look back to just about 8 years ago, you can look at the biggest businesses for Berkshire outside the insurance companies. It's MidAmerican, Lubrizol, Iskar, Marmon, and BNSF. And 4 of those companies were not part of Berkshire, just from when Bill joined the board back in 2004.
Yeah, we had one of those then. Yeah.
How has your investing strategy changed and why?
Well, we've always liked buying businesses, but we've had a fair amount more success in the last 8 years. So You name 5 companies. We had one of those earning a little less than 400 million pre-tax then. Now we've got the 5 making a little more than 10 billion. So we're transforming Berkshire as we go along. It's a work in progress.
You know, Bill, from the perspective of being in the board, has your job changed over that period of time? Is it different as you begin adding more businesses and the business just looks so different?
Well, the key role of the board is supporting Warren, talking about the succession plan. And so that's pretty much the same. It is more about wholly owned businesses and less about trading stocks. And in that sense, the value is very enduring because those business franchises are, just amazing assets. So I think it's a really great maturation process that bodes well for the future of the company.
The future of the company, how will the board's role change with the next CEO who comes in? My guess is things are going to be run a little differently.
Well, you'll certainly have a period of supporting the new CEO where, we'll have some institutional memory and want to make sure he gets into the job very well. So I think things will be more intense then than they have been. There'll be a lot of questions about the company that all of us who are on the board will, lend our time and our reputation to talk about what an enduring, incredible company Berkshire is, and make sure that's really what's happening.
You've talked about how succession is the number one topic that the board talks about. You have a board meeting that starts in about an hour and a half from now. Is that going to be the top topic of discussion today as well?
It's always the main topic. Warren's good about letting us bring up anything we want, but we all know that that's what the main thing we're there for, and we go through it. Even when there isn't that much of a change, we make sure that nobody in the room has new information or new thinking because it's such a critical decision.
All right, Andrew and Joe, I'll give you the last 30 seconds each if you have a quick question that you want to ask.
Hey, Bill, you have a very special friendship with Warren, and I never even like to think about this, but in a post-Warren world, 10 years out, do you imagine you'd still be a board member of Berkshire Hathaway?
Absolutely. Absolutely. That's one of the things that I can do as a favor to Warren.
We got no time, Warren. You gonna give me the jet? I mean, is there some kind of ceremony or something that you've got planned? You've got like 40 seconds now. You're not going to, are you?
No, I was planning. I was planning to do it until he said 10 years out. If you said 25 years out,
I heard that. What? That was cold, man. That was cold.
That was not intended.
What? People don't live past 92?
No. I meant 10 years. No, look, Warren's going to live till at least over 100, 120. I was thinking 10 years. 10 years after.
You know what?
10 years
Warren,
after.
I heard that
question
too.
was.
That was cold, Warren.
No,
I heard
Warren.
That too.
I misspoke.
I heard that too.
That wasn't the intention at all.
Cold. You know, Sorkin, he's going to live forever because he's in his 30s.
No, Warren's going to live forever.
Yeah, he is.
We're all going to be very happy about that. So it's been great.
Guys, I will let you on a secret real quickly. Just even if you think I never do anything for you, I just want to tell you about the hazards of working here. We're in a big hangar. There are a lot of birds. One pooped on my head 10 seconds before we came back to air. Look.
Oh, my God.
It's there.
Only in Omaha.
Only in Omaha.